Hi guys, welcome to another episode of the FXP weekly analysis. If you're first time watching this video, basically what we'll go through is we analyze some markets, alright, a few pairs for the upcoming week, and then to share with you some of the technical analysis and insights of how we do the market analysis, alright, to identify potential setups. And for those who have been following us for some time, right, really thank you for your encouragement and support. Right, so if you really find this video helpful, do like and subscribe to the channel and feel free to share it with your friends, alright? So the first thing I would like to share is if you follow the market on Monday, right, there's a huge drop in the US S&P and Dow Jones, alright? The main reason is perhaps China devaluation of its yuan, right? Personally, I don't follow the much of the fundamentals in making a decision in my trade, right? So in terms of that, a lot of my decisions are still based on technical. But having said that, right, it's important to follow what's happening in the economy as well, right? So this is a crazy movement on Monday, right? Several currencies has been hit as well, right? Having said that, what we want to do is to take a quick look, right, on next week news data event, right? And if you look at next week, it's pretty I would say an action-packed week as well. Right, on Tuesday you have the Aussie RBA rate statement and cash rate, right? And we go into Thursday, right? So Thursday you see the Euro minimum bid rate, the ECB press conference, and going on Friday you have your NFP, right, non-farm payroll as well, right? So some of these data are really important for you to take note because when this data release, it will definitely affect the market. Alright, so it's up to you whether some traders prefer to stay out of the market when these news are being released. Right, some traders have their plan and state that my decision is purely based on technical, so I do not take into account all this data. Right, so different traders have their different philosophy of trading the market. Right, the important thing is keep to your plan, alright, and be consistent with it. Right, so having said that, let's jump into the pairs. So this week we'll be going through three pairs: the Euro, Yen, Pound Canadian, as well as the gold market. Right, so the first one is the Euro Yen. If you look at the daily chart, right, the overall trend currently at this moment is in a consolidation phase. Right, having said that, we don't really trade on the daily time frame. So if we drop down to the hourly time frame, what you see is currently it's in a downtrend in a 1 hour time frame, right? And if you look at this, we do have a potential harmonic pattern forming, right? Let me pull out my Fibonacci, right? If you pull from this leg to the lowest low, right, you see the retracement comes in exactly at the 50% retracement level. And then from the price bounce off, and then what we have is a potential, right, a potential bad pattern forming. C leg and your D leg, right? So what we normally do is we then drop a horizontal line at the completion level and look left and see if there's any confluence in terms of structural. Right, in this case there isn't a very nice one, but we do have some minor one over here, right? And if you are more conservative, right, you can see that by pulling your X leg over here, your X starting point is here, you do have a potential bad pattern as well, because then your B leg, right, is actually at the trade to retracement, right? These ratios also fulfill the criteria for a bad pattern, right? So if you're looking for the bigger bet, right, the completion is at the 138.2 level. And once again, if you look left, you do have some conference structural level as well, right? So depending on which bet pattern you would like to take, right, you do have two potential patterns over here, right? Let me just draw in the bigger one. Right, you do have two potential patterns, right? So some traders who are aggressive, you can enter on the smaller one, and if you get stopped out, alright, you can re-enter on the bigger bet. Right, so this is totally up to you on how you want to do it, right? But for us, let's take the smaller bet as an example, right? So if you enter over here, our stops will have to go above your X, all right, slightly above your X. And then for targets, we'll be using Fibonacci tool and aim for the 382 retracement of it, right? So it's, yeah, just over here. That's for target 1, right? And for target 2, what we'll be doing is the stops and entry will be the same, right? But our target 2 will be at the 618 region. Right, so the important thing that I would like to share with you is to always take note of your risk to reward ratio. Right, if you look at this, target 1 give you a risk to reward of 1.7, right, and target 2 give you a risk to reward of 2.8. Right, this is important because technically you want your risk to reward to be more than 1:1, or minimum is 1:1. Main reason is because if your hit rate, right, or your win rate is about 50%, you will require a risk to reward of more than 1:1 to actually make money from the market. Right, so something for you to take note in terms of risk to reward ratio. But definitely if your win rate is higher than 50%, you don't really need a risk to reward of 1:1 to make money. Right, so this is something that is under money management, which you might want to take into account and study a little bit more about that. Alright. So the second pair that we're going to look at for next week is the pound Canadian. Right, once again, if you go up on the higher time frame, what you are seeing is still in an uptrend, right? But last week itself, there's a huge drop in this currency. And if you zoom down to H1, we do see a triple top over here, right? And a triple top followed by an RSI divergence as well. With this setup, alright, and price has broken the neckline. With this setup, we have a potential of 2618 setup, alright. So what it means is that once it's broken the trend line, we are interested to look at the 61.8 retracement level, and should price comes back up, right? Should price comes back up to this level, that's where we'll be shorting the market, right, at the 2.069. Right, with stops above your tops and targeting the previous low. Right, so if you look at this, the risk to reward ratio is about 1.3, right? Not too bad. Right, and how we set for our second target is we use our Fibonacci tool and we pull from the low back to the top and we aim for the 127. Right, so if our entry and stops be the same, our second target will be at 127. Right, so that second target will give you a risk to reward of 2. Right, so decent risk to reward. Right, so this is something that you can look out for in the market as well. Right, so the first setup is definitely you need a double top, or in this case a triple top, and you look for a divergence. Alright, and once price has broken below your neckline, you put your Fibonacci tool to wait for a 61.8 retracement, and that's the level in which you'll be looking to enter the market. Right, and if you look left, we do have some minor support and resistance structure level as well. Right, so what I want to share with you on the gold market is pretty similar to the pound Canadian. Alright, if you look at this, we do have a double top. Alright, let me just show you what's happening on the higher time frame. Right, the gold market has been dropping and then consolidating, and then it has broken up and it has reached a level which then it drops again. Alright, so what we're looking at on H1 is that, look over here, you have 1 top, 2 top, 3 tops again. Alright, and if you look at the RSI, you do have a divergence. Alright, so something very similar to the pound Canadian. So what we do is we pull our Fibonacci tool, right, from the top to the lowest low, and we are waiting for a 61.8 retracement. Right, so what we are expecting is if price comes back up to this level, what we'll be doing is we'll be shorting the market, right, with stops above your top, and your first target will be at the previous low. Right, and how we set our second target is once again the same. We pull our Fibonacci and we aim for the extension of 127. Right, so it stops in here. You'll be aiming for the 127. Alright, if you look at the risk to reward ratio again, it's definitely good. Alright, the second target gives you a risk to reward of 1:2, and the TP1, your target one, will give you a risk to reward is about 1:1.4. Right, and if you look at it technical wise in terms of support and resistance, you do have some minor structure to support this trade. Alright, so this is some of the setups and methodologies that we've been using over here, and if you find that it's something that you can adopt, right, feel free to use them as well. But just like to share with you, right, these setups that I've been sharing with you is not 100% guaranteed winning trade, right? For us, what we had over the past 4 months is that our win rate is just about 50%, right? But what we like to share with you is that with a 50% win rate, you can actually make a profit out of this market with a risk to reward ratio in mind, right? With a decent risk to reward ratio, right? So this is something that you want to take note of. Other than that, I'll see you soon and I'll talk to you another time.